The next OCR announcement is the 20th of November. We don't expect that to change at all. But to give you the two different opposing views, I guess, let's have a look at this. So you've got the hawkish view, or the pessimistic view that we've got inflation embedded in the economy and we're going to really struggle to get rid of it. And so there's going to be an increase in the official cash rate and it's going to stay higher for longer. There's less and less people siding with that view at the moment because things have changed and we had lower than inflation in the last announcement and it's looking pretty good for the next one as well. So, but what they're saying is boosting that is net migration booming, and then the housing market's heating up as well a little bit, and interest rates are not at historical highs. So, the dovish view, or the more optimistic view, I guess, in terms of when interest rates are going to come down, is that the existing tightening that we've done already, so the existing increase in interest rates have already done enough to quell the inflation problem that we've got. And policy takes time, and there's some global headwinds. And so, policy takes time is the big one for me. I'm seeing the impact of people coming off interest rates and going on to higher rates. And it is taking the wind out of people's sails, which means they're spending less in the economy, which means that we should be getting some good rates. And that's forecasted to be by the middle of next year. Okay, so in terms of cuts to the OCR, bond traders, probably the most invested people in terms of the outcomes of interest rates. They're siding with the dovish view, but they're plotting a path in between the two. So no surprises there, and I've got a little graph to show you on that. This is forecast for the official cash rate. You can see there's a wild difference between everyone's opinions. This is around May next year is where it starts to change, but effectively, ANZ are saying by May next year they could be at 5.25. BNZ's a bit different at 4.75, and the wholesale interest rate market pricing, 80% say there's going to be a cut by August next year. So that's what we're kind of predicting. The give and inch take a while, so the Reserve Bank's nervous about, at the moment they've got their foot off the brake, so they're not increasing the official cash rate. We're just coasting along, but they're nervous if they put their foot back on the gas again by decreasing interest rates that we're going to fuel inflation too early. So that's what they're cautious of. Just a little bit of useful information. So, borrowers have had a hard run since we had interest rates in the mid 2s and 3s. They were tested at interest rates of 6% when they applied for their lending. Now we've got people coming off those rates and getting, in the 7s, and loan tested at 9. And effective mortgage rates have gone from 2.9 to 5.4 now, and forecasted to go to 6.4. So there's that monetary policy coming in that's going to, help drive our inflation down and ultimately bring the rates back faster. That's my belief. How long are people refixing for? So 18 months is still the big winner at the moment, has been that for 2 months in a row. And people are coming from their 2-year rate or they're jumping from their 1-year rate and heading to the 18 months. So, we're favouring 1 year to 18 months at the moment. But please hit us up and we'll help you out and let you know, how it looks for you and your situation and tailor the info because it really is specific to your situation. Look forward to helping you out.